As commodity markets come under pressure, one mineral is bucking the trend. Lithium, rare earth minerals, under the guidance of CEO Kiran Morzaria, is pushing ahead with its target of a spread of assets at various stages of progress. It's got wide interest in lithium, including a 17% interest in Bacanora Minerals, which delivered its PFS to investors at its Mexico project just last week. Kiran Morzaria joins us now with some more of what's happening at Rare Earth Minerals. We spoke to you just over a year ago. Before we take a look at what progress the company's made, we spoke then about the dynamic of lithium, the demand and supply in the market. And you were saying then about the fact that there was undersupply. How have things changed?
I think that paradigm still exists, and I think it's been more exacerbated by the possibility of grid storage. And we can see that with grid storage, in terms of storage capacity, we're talking, in America they produce about 1,000 gigawatt hours of power, and yet the grid storage is a fraction of that, 0.1 gigawatt hours. So we still see that dynamic, and that's just simply based on the EV market and the uptake of portable electronics. So we still see a dynamic where we're talking from battery capacity going from around 45 gigawatt hours currently in place to 175 gigawatt hours in 2025, which translates to about, in terms of a total lithium consumption, of which batteries represents about 40%, about 180,000, still looking at the 400,000 tonnes per annum of lithium carbonate equivalent required. And they're fundamentally, certainly we can't see where that supply increase is going to come from. There are a few projects coming along, and it falls to the juniors in the market, such as the Sonora Lithium project and the Sinivec project, and Orocobre, which has obviously just come out with some figures in terms of its production, to fill that gap, because even the majors are finding it hard to secure the resources at the right cost structure to fill those gaps.
You're moving ahead, as I said. You own a number of different projects along the various the pipeline of development. You just raised £3.5 million to move into other projects. First of all, the raising. How difficult was it to sell to investors? Because you've done a bit of dilution there. Is what happened to us?
Yes. The overall dilution was a net effect of about 8.73% of the enlarged share capital. I think it was relatively difficult, and I think certainly you went to traditional commodity players, and they just went, no, sorry, not interested. I think we had to go slightly outside the box and talk to energy players, and so we were able to raise the money. We believe we'll be able to apply that money, and it's not an untypical discount, but we were able to raise that money, and we'll apply that money, and already have applied that money, and already that into the Sinivec, which has shown a 30% growth since we applied that money. So we believe that we've got an understanding of the market and assets to invest appropriately and deliver in assets that will hopefully deliver superior returns.
That Sinivec involvement, I think you bought into a company called European Metals Holdings, haven't you, which is an Australian-listed company, and it cost about what, £600,000?
Yes, that extra 4 or 5% cost £600,000 to maintain. So we're at 19.9%, 19.8%. It is a large deposit, same cost, lower cost structure in fact than Sonora. The scoping strategy shows about 1,000.
Is that because it's in the Czech Republic as opposed to Mexico, or is it because it's a different mining? Application.
We always look at the deposit itself, because mining applications and technologies can be replicated around the world, and those efficiencies can be gained just by replicating it. We look at fundamentally the deposit. So the Sinivec deposit has an advantage because it obviously has lithium carbonate, and then it has a credit in terms of tin and tungsten and some possibly other potash credits. So those credits built into it, actually, excluding the tin and tungsten, is about $1,500 a tonne cost for lithium carbonate. Now, when you look at others around there, the cheapest out there are brines around 2,000, 2,100. So it is a very cheap, low cost quartile potential producer. Now, we'll see as they go through the PFS, that's one thing they're going to try and achieve this year. And we, as active shareholders, will help them achieve that and ensure that they do.
Lithium's about, what, $6,000 a tonne at the moment, I think, so that gives us some sort of context on that. What are you going to do with the rest of the money? Because you've just explained away a small proportion of the £3.5 million. What else have you got your eye on?
Well, there will be obviously contributions that we would have to make to the definitive feasibility study, because not only are Bacanora is funded in terms of equity funding, but we also have a JV, and we'll need to contribute into that JV on the Fleurel Suez deposits, so part of that money will go to there. We have Yangibana coming up, and Yangibana is a rare earth minerals deposit, less out of lithium, but that has going to complete its PFS by the end of this quarter, or so it's announced. So we will need to decide, because that's a free carry, do we contribute to the bankable feasibility study? Then we'll always keep our eye out for assets. I think some assets are slightly overpriced, and we're seeing that in some assets in Australia. But we look out for value, and as I said, we take a strategic approach. Can this asset, is that scalable? Has it got scale and scalability? And does it have the cost structure that is unique, i.e. it's not a technology, it is about the resource itself?
Where do you go from now? Because talking about Bacanora, the feasibility study coming up, they've got long-term plans to be involved in full production. Presumably you'll want to have part of that production rather than sell it out. You've got to contribute to that mine plan. It's going to cost a lot of money. They were talking to us just last week about potential costs in getting the whole thing moving. How do you go about raising that sort of money in this sort of market? Because it's tough out there.
Yeah, and as I said, in the commodity sector it has been, but I think for the right project, right margins, you've got EBITDAs of whatever, I think it was $150 million a year, $150 million a year. You will be able to get the right debt funding and stroke equity. It's going to be it would have to be a traditional funding in terms of that manner. So it'll be, once they get to the definitive feasibility study, there'll be some equity raised probably, and a debt associated against the project. And that's how you would see this typically progressing for something like Sinovec as well. Again, we would hope to see similar EBITDAs, and once it gets to that stage, it will be funded that way. And so we would have to contribute, if we wanted to retain our 17%, contribute into the equity portion, and if we wanted to retain our JV interest, contribute there as well. So yes, we would have to contribute to get that. But then one would hope to, as a result of that, get 17% of the net present value of $776 million.
Yeah. When we spoke just over a year ago, you were then talking about what has just come to pass, this PFS at Bacanora. You've increased your stake in that. Where are you going to be in another year's time? Let's weave that into a comment about the share price as well, if we can, as to what's happening within the business and how you see that rolling out, because it all goes to part of the argument about the investment case at what, £40 million where you are at the moment. And what do you say to investors about where the company's going and how things are going to unfold?
Well, the Sonora Lithium project has got a very clear strategy of how it's going to develop, and that is a process of effectively doing all the technical studies, the additional offtake agreements, all the way out to the DFS at the end of early next year. Associated to that, you have certainty. You have certainty from a 25% certainty to a 10% certainty in that. So in a year's time, we would have the DFS out. Bacanora and the project will be going through some funding in relation to that, one would assume. And then the Sinovec project would have hopefully gone and delivered its PFS. So we would then have another economic driver of saying, well, okay, what is this stake worth, and how are we going to develop that? And we see these projects jointly filling the gaps in the demand, and we would then hopefully see appreciation, our value, and our share price.
It's been quite a wild ride, hasn't it, for those investors in the stock? But if you take a long-term picture, there could clearly be a line drawn. How difficult is it at the moment as a CEO to deal with all these wild rides?
I think we are more volatile than most, and I would hasten to say that if you look at our volatility, we have average about £200,000, £300,000 traded every day. Well, we look at who we've endeavoured.
There's a lot of retail interest.
Yes, and sometimes we'll have a market where the people are shorting or taking long positions. But overall, if we look at how we've started, we started 2 years ago, more than 2.5 years ago, and I think our market capitalisation was on the £2 to £4 million mark. We've gone from that value to 41 million over that period of time, and that's driven because we have this growth story within the lithium market, and we've picked assets that have growth within them in terms of getting towards production. So we need somehow to also look at how to replicate that again, and that's why we've gone into the Sinovac project, because we can see a similar story evolving, a similar set of economics evolving, and hopefully similar returns evolving.
Well, look, we look forward to speaking to you again in a year's time, see where things are moving up. But Kiran, thanks indeed
Thank you.
for joining us. That's Kiran Morzaria. He is the Chief Executive of Rare Earth Minerals.